Hello everyone, how's it going? And today we're going to be talking about one of the most successful runs in the stock market's history. Palantir has been one of the most significant and spectacular recovery stories the market has to offer, and it has more than 10x in less than 2 years. It's been an amazing run for anyone bold enough to stick around for Palantir when its stock price reached a historic low back in 2023. Now that it's recovered from the past, Pltr is poised to become a powerhouse in the tech field, and in some way it already is. With that being said, if Palantir is a trending stock in the market, it remains a company many people don't necessarily understand, which leads them to be vulnerable to volatilities. Many are jumping on a bandwagon to make sure they don't miss a life-changing opportunity, which may cause some issues down the road. And whether you like or hate it, having a better understanding of Palantir can benefit your investment performance. Hey everyone, I hope that you're having a good time and making lots of money. In this video, we're going to be talking about Palantir and see if it's a good fit for your portfolio. As investors maintain their interest on Palantir, the company reached many milestones for a stock that was trading just below $10 not that long ago. The company's operational break-even and profit saved itself from the abyss, and then the AI craze along with the changing political landscape took over the rest. Palantir is now officially part of the major league, and its share price entered into the price discovery phase, where even the sky isn't the limit. Most people have been holding the bag when the market suddenly tanked around 2022 because of the international events, and in that difficult context, most of us were hoping for a partial recovery to minimize their losses. And in exchange of our patience, the market rewarded us with a triumph for those willing to give the company time to expand its operations. With the financial landscape moving thick and fast, it wouldn't be surprising at all if new all-time highs are made every single other day. Volatility is our friend, and it is the case when it comes to Palantir shares as well. As one of the more symbolic companies in the new digital age, Palantir has been keeping the market's hope up to offer safe haven for anyone looking to commit asset and equities. The age of AI may not be upon us just yet, but we're definitely pricing in its arrival, and Palantir is the manifest of that trend. Over the years, it became more than just another tech unicorn. Instead of begging our money for pretty keynote presentations, Palantir has a solid set of fundamentals and enough influence to forecast market demand. It can also tell us where is the rising tide, or whether there will be a rising tide ready to raise all ships coming our way, or a hurricane to bury our dump money. Palantir not only shows us where the trend is going to be, but in my opinion also reinforces and sets new trends that may benefit the market at large. In this video, we're going to take a deep dive into Palantir and see whether it deserves to have a place in your portfolio. Before the video continues, I just want to take a moment to thank each one of you for coming to my channel, and hope that you're going to enjoy your stay and to come back for more. If you like what you see, please consider to like, subscribe, check out my channel for more content about Palantir and other companies I cover. Over the past few days, Palantir reached a new historical peak in its share price at $160.39, which happens to be the highest share price so far. On Tuesday, the share price hovered around $156.24, while the market looks for additional catalysts in the upcoming Q2 results. Its earnings per share is around 14 cents a share, with its revenue around $939 million and expected to keep increasing. Now, this is the earnings per share. It doesn't mean that they're giving this out as dividends. In fact, at the moment, the dividend yield per share is exactly at 0%, which is normal, by the way, for most tech stocks. We don't exactly expect them to give us dividends. We expect them to keep the money and to use that for growth. The price opened today at $159 and went lower by noon before finding some short-term support between $156 and $157. The trading volume is around 50 million shares and has been the case over the past 30 days or so. So the demand itself remains at a very high level, a very high baseline. But the overall trading volume is down due to the summer vacations and the amount of people staying on the fence while waiting for new catalysts to come in. At the moment, the market cap sits at around $368 billion with a price to earn of around 689, which obviously is very high compared to similar companies or any companies for that matter. But we're really buying the potential to be more than the performance that already is. And as it happens, the $155 level took a lot less time to clear through simply because there were a lot of people who were willing to buy Palantir shares even though the price action was very close to the peaks. The long-run potential of Palantir remains excellent, as shareholders and stakeholders are well aware of its intrinsic value and growth potentials. Palantir's ideological and operational pragmatism have served the company well, which may be a sign of time. And over the past 12 months, Palantir have been rising in an almost straight line and recently has been going up in a parabolic manner, as the market expects Palantir to do very well from both the public and private sector, and the company delivered on that assumption. So Palantir keeps going up, and as it keeps doing so, it would be useful to remind people that the market has periodically experienced fear and even actively participated in fear-mongering about Palantir's price reversal. This is part of human psychology and will likely be a self-fulfilling prophecy at some point, resulting in a significant pullback or even a temporary trend reversal. We gotta keep this risk in mind while trading Palantir shares. So from a macroeconomic perspective, Palantir is sensitive to all the major trends from real-world economies and events. Beyond the company's specific stuff, economic data releases, changes in key policies, as well as election outcomes all influence Palantir's price actions. The recent presidential elections turned out to be very good news for the company because Peter Thiel, the co-founder of Palantir, has always been a close ally of the president. The company has been maintaining and developing its relationships across the aisle, especially in defense, healthcare, and customs, which all happen to be key aspects of Republican agenda. Despite having contrasts on both sides of the aisle, it's obvious that ideologically speaking, it's much more comfortable with the current administration, and that certainly helps for a company with significant exposure in public sector. In terms of media coverage, I would say that most outlets tend to follow the existing trend, where the price action of the company leads them to explain the present instead of predicting the future. Some are, of course, suggesting caution given the recent gains, and they've been suggesting this kind of pullbacks for a very long time. Many suggest that Palantir may be on the cusp for more catalysts, given the change in the economic environment in the years to come. The interest rate decreases and the potential changes on geopolitical events around the world are all going to have significant impact on the price action for the better and worse. Articles themselves are not worth analyzing one by one, and yet the overall tone set by the media landscape altogether tends to be a forerunning sign of trend continuation or reversal, and in this case, it's very obvious that they tend to go for the continuation path. The valuation of Palantir is fueled by the company's own performance, but alongside the surrounding environment and investors' need to find a refuge in an uncertain time. A lot of people have been looking to find a decent entry point to make a comeback to the equities market, and when the Japanese market liquidated billions of positions a few months ago, that was the last opportunity to buy Palantir at a discounted price for anyone interested. 3 digits territory is where the market sees Palantir in the foreseeable future. Given the composition of its shareholder base being much more retail than institutional, Palantir has always been a stock made of momentum and a large dose of anticipation as well as self-fulfilling prophecy, instead of level-headed analysis of its actual numbers. We're not here to buy Palantir that already is, but to own the Palantir that people hope will become in the next few decades. Any rational analysis of the financial statements may justify short-term price action and maintain the price action to a high baseline, but not to push the current valuation to new peaks, or at least not to the extent people want to buy Palantir shares in the first place. We see that the market reacts far more significantly to announcements of keeping or gaining new public contracts compared to any other announcements. And I would say that this is true, and to a fault, Palantir remains heavily dependent on public sector, and it certainly shows in the price action. Looking back, there are many regions that support Palantir's share price, but they're far from where the price action is at the moment. The current consensus surrounding Palantir is that the market wants to keep pushing Palantir price up, and that they're constantly looking for more clarity and catalysts from the rest of the potential shareholders before making any move. Since Palantir is still in the price discovery phase, a lot of people also believe that the world economy is in a very fragile position after years of shutdown and uncertainties, and that a massive correction could be overdue. This is a relatively conflicted state of mind for Palantir stakeholders, and it's not difficult to see why once we zoom out and to see the extent that Palantir has risen. But from a longer-term perspective, Palantir has a pretty interesting price action pattern compared to all-time highs just a few years ago, because it has already succeeded in going beyond the previous resistance, and there's a lot of potential regarding where it's going to go next. Palantir is a tech company created in 2003 and then went public in late 2020, peak of the last market craze. It operated in data analytics sector of the tech space and has been one of the leading companies, or at least one of the most influential in that area. It's known for its bold position taking, its long-established relationships with the public sector, and the engagement of its key members such as Peter Thiel and Alex Karp. Another aspect that sets itself apart from many of its rivals is its proximity with the intelligence community, as the company relied on seed funding from the agency in the early days. No one ever shouts from the rooftops that they want to do evil, but Palantir doesn't shy away from delicate situations by working with the public sector agencies in legal, healthcare, border control, and law enforcement. Simply put, it's a company that doesn't mind being portrayed as evil, almost wearing it as a medal of honor. In fact, shortly after it went public, Palantir decided to move its headquarters from Silicon Valley to Denver, Colorado. This move was more than just a pursuit of lower overhead cost or a change of scenery, but a statement about the public image it wants to portray. The market has always shown a lot of interest in how the company and the stock are doing. The fact that it went public when the bullish sentiment was sky high in the tech sector could have been a contributing factor, as the world was preparing for a fundamental change on how societies would function in a world ever more interconnected while remaining remote from physical offices. The technological and societal utopia that was deeply flawed and never truly came to be. Palantir shares attracted the market's attention mostly because its narrative was the right fit at the time, as the tail end of quantitative easing mentality combined with the pandemic-era dream of interconnectivity and never-ending financial boom, while capital was looking for a safe haven from the uncertainty and incoming collapse of the real-world economy outside of our screens. In a way, Palantir symbolized the answer we wanted to slap on all our problems, and for some time it was made true by the supply and demand of modern finance. We're interested in Palantir's promise of reaching ever higher price levels, a promise that seemed to set in stone, when large quantities of money were pouring in a company with deep pockets to back it up, as the world was preparing to enter in a new era of endless growth. Now, this very optimistic narrative has been backed up by numbers and beyond. Financial information has always been known to move the markets, as stakeholders want to have their assumptions validated by something concrete. Gross margins, cash flows, and revenue growth are some of the most sought-after data points that people want to know about when looking up a company. The gross margin measures how profitable Pltr truly is at the core. Beyond its quality of marketing, the hype around its projects, and the brand power and charisma of its leadership, gross margin tells us whether there is enough demand for what the company offers, and if each additional dollar covers the additional expense that is generated alongside. And to that end, Palantir is a very successful company with a decent profit margin, even when the shares were traded below $10. This was the first sign that Palantir is more than just empty promises in exchange of your hard currency. The business model is something that can be scaled up and marked up because it has a true fundamental value validated by its clients. Once the core business model is validated, cash flows tells us whether Palantir will need to go through cash injections to keep its operations going. Very often, tech companies ask shareholders to pitch in even after they bought the shares, because the funds collected from equity sale don't cover the operating expenses. If that were the case, this would be a sign of weakness from the company, because it would mean that the company's own operations are not profitable enough to stand on their own. For Palantir, that issue is irrelevant because its cash flows have been positive for quite some time, mostly because its core operations are profitable and it doesn't need to dilute the shareholders to keep the lights on. But the numbers are not enough to keep Palantir to go higher. The most important factor is the growth rate of its revenue, especially from the public sector. Just like many other tech companies listed on a Nasdaq, people buying Palantir today want to buy the powerhouse to become, not the decently run and profitable company that is. This would also explain the very high multiplier that Palantir has compared to many other blue-chip companies in more mature sector. This is a double-edged sword for those who want to dabble into the tech field in general, but for Palantir, the public sector aspect is an additional side to watch for. Since most of its growth comes from the public sector, any additional partnership with healthcare, defense, law enforcement, and so on trigger massive upside for the shares. On the flip side of the coin, every time an existing partnership or some kind of scandal makes it to the headlines, Palantir shares may see a huge dip that could take a few days to come back from. The three measures are what define Palantir and what explain the dynamics in the market. It's an interesting company that people put a lot of hope and money into because the financial results do suggest that Palantir can deliver what people hope it will. Of course, since you're looking up about Palantir, chances are there are unique aspects piquing your interest. Trading or investing in Palantir does come with its own upsides, including its unique profile, its potential growth rate, the existing stability, and so on. Palantir is a company operating in data analytics, which is a very promising sector with lots of favorable talking points and potential vectors for future growth growing from it. The world is getting more digital and analytical on a daily basis, as more and more business decisions need data-driven information to optimize daily operations of their own companies. Palantir has been trading for a few years, but its existence dates back from more than a decade ago, and its expertise does bring it head and shoulders above many other rivals. Its deep relationships with many deep-pocketed public sector departments in defense, law enforcement, and healthcare all require digital solutions for their planning and decision-making. Unlike many of the Silicon Valley unicorns, Palantir also doesn't pretend that it doesn't do any evil or won't do any evil, or that it lives in a perfect world. The headquarters move to Denver, along with the Davos speeches of its CEO Alex Karp, does suggest that Palantir is willing to take on challenges from our age and isn't afraid to say so very loudly. The relationships established by Alex Karp and Peter Thiel, two of the founding members of Palantir, have opened many doors in both public and private sectors, allowing Palantir to cruise on the trend. Recently, it also announced that it's going to participate in the trending AI field, which is one of the main reasons why the stock, skyrocketed. In addition to all this, Palantir does have a layer of stability that many of its rivals don't have, and that can be seen in its cash flow. Palantir's cash flows have been in the positive for some time already, which is a rare advantage above many of its competitors because it means that a company can sustain itself in terms of needs and doesn't need to beg investors to water down their own equity. With that being said, investing in Palantir also comes with a unique set of downsides due to its company's profile and the characters of the sector itself. Being a company analyzing data, Palantir will be much more exposed to potential legal problems compared to other kinds of businesses. Since the topic of data privacy, ownership, and proper usage have been under heavy scrutiny from previous scandals with social media, how Palantir acquires, processes, and safekeeps data while serving its clients could be open to legal battles, which may cost the company its image, its bottom line, and future opportunities to get more contracts. This is a touchy area of the economy and no one wants to rock the boat, meaning no one wants to take on the responsibility if anything bad actually happens. In that case, it's entirely possible that Palantir will take the loss without having the capacity to shift the blame on other stakeholders or participants in that area. The other thing to consider is the decay of the narrative's value. At the moment, AI and data are very popular topics that are trending in the market. But what would happen if they stop being so popular once a newer sector is created? If we look at what happened with electric vehicles, we may see similar drop in the interest for data and AI narratives, along with a drop in the market cap value such as Palantir. What these additional risk factors mean for anyone looking into Palantir is that it is a blue chip sized tech stock with the volatility of a startup, mostly held by retail shareholders. Trading comes with a significant level of price volatilities, and investing does require a fairly high tolerance for uncertainty. Of course, buying a security, any kind of equities, requires us to analyze the environment the stock is evolving within, as well as the phase of the market that we're currently in. More often than not, these elements are far more important and will influence the price action far more than the data specific to the individual stocks. The market is the result of collective speculation and analysis with multiple layers of interpretations piled on each other. And we must know what is true, but also what is perceived to be true by the rest of market participants. For example, we may very well feel that the market is overbought, but it is only overbought when the rest of the market participants decide that it is time to dump their positions. And this is why timing is often more important than the assessment itself. And this aspect of financial market is less obvious for dividend stocks and ETFs because major market bubbles are less likely to happen in those mature sectors and companies. Their upsides and downsides are usually priced in and have been so for decades. With that being said, there are other phenomena that we should keep an eye on. So unlike other investment options like bonds or savings accounts, the value of equities tend to fluctuate over time. Of course, don't get me wrong, it doesn't mean that everything has to be hitting all-time highs or historic lows on a weekly basis to convince us, but things that seem rock solid for many years could crumble rapidly due to changing circumstances. This is why the most important element to factor into our analysis is the level of confidence. For example, are we in a market where people are optimistic about the future, or are we looking at a market where people believe that the financial Armageddon or World War III is upon us every other day? The degree of optimism or fear that we can read in investors' behaviors may very well drive the price action of assets much more so than companies' own fundamentals or specific numbers. It is a very arbitrary and yet fragile key that can explain why sometimes a stock or a sector suddenly tanks without an obvious reason. This assessment to the market behavior will eventually lead to overreactions like overbuying and overselling. As long as we understand that fear and greed are the biggest motivations to human behaviors, we will also understand the power of acting against the current of retail investors, especially in moments of major volatilities. Beyond the market's own self-fulfilling prophecy, the external factors that play an important role are the interest rates, the state of global economy, and the direction as well as destination of capital flows. As far as the interest rates are concerned, these may be the biggest indication of whether we are entering into a bullish or bearish market. Interest rates will influence the rent of the money when placed into a risk-free environment, because the rates are based on what the central banks of each country will pay for holding the money of institutions, and also have an influence on the yield of sovereign bonds. There is a near-perfect negative correlation between the interest rate and the equity price. At the moment, we can see that the interest rates are edging down around the world, and that usually means that it's a good news for the equities. It means that eventually there will be more market participants who want to risk their money in equities because collecting interest payments in a savings account is simply not worth it. The current tendency indicates that things are going to look better in the years to come, as the tight monetary policies around the world are being slowly replaced. And the state of global trade is another aspect to keep in mind, even though it may not be a must for a dividend stock to do well. The state of global economy doesn't just mean how well the collective economy is doing on a global scale, but also whether there is a will to carry out international businesses. To that extent, I would say that things have changed massively from the heydays of 1980s, as many countries are no longer willing to accept the very concept of globalized trades, with protectionism becoming the underlying tone in most countries. The circulation of goods, people, and information will gradually become regionalized, and that reality is likely to continue. The dividend stocks and ETFs that have significant overseas operations might be negatively impacted by the trend, but the effect will probably be slow and delayed. This will also depend on which segment of the operations is overseas, whether it's the cost or revenue centers. I would argue that for companies with productions overseas may be less impacted by those who target consumers outside of the Northern Hemisphere. The third element is capital flow, or the direction of the money around the world. Capital has two objectives: preserving itself and maximizing the growth. On top of those, they're looking for a strong currency that the investments are denominated in. Despite the current ceasefires brokered, due to increased global instabilities overall, the flow of capital is still going to safe havens around the world, where the probability of war, large-scale instabilities, and similar incidents are the lowest. And this means that countries that are either economically or militarily speaking powerhouses with stable governments are the prime choices for those looking for safe placements. And for the foreseeable future, money around the world is facing an unstable landscape outside of the US. And I personally believe that their goal is to preserve their capital before maximizing their yields. The biggest safe haven in that regard remains the United States, and this is why I believe that the asset placements in the US, including stocks and ETFs, are going to increase at the expense of their yield. My opinion overall about Palantir is that the company has a very bright future ahead of itself, so the real key decision here is the entry timing. Personally, I believe that Palantir should be part of any risk-seeking portfolio. In terms of timing, I would say that having a small position at a time would be the wise thing to go, and over the next 12 months, it should be increased to 10% of your portfolio's capital. Thank you for watching and see you next time.